or welcome to my channel. For those of you new, my name is Dave and I work in financial services. Now these videos are a mixed in journey towards financial freedom, financial well-being, financial products so you, like me, can meet your goals sometime in the future. Now it's not to boast or brag, say look at me, but to give people hope and ideas. If I can build a portfolio over £100,000 within a tax-free wrapper, so can you. If you take some steps, think long term, and shall we say, create within a tax-free investment wrapper. So let's get into the video, which is about my individual savings account for November 2024. So what is the aim of the portfolio? Well, we're looking for annual growth year on year of 10%. We're looking at dividends of 2024 of £3,600 and a year-end valuation of £113,000. So how have we done in the month? Well, a very good month. We started at 116,805. We finished at £121,330. So profit in the month of £4,525. Year to date, return of 20.65%, so well above expectations. And look at the following graphic, contributions of the month, £300, year to date tax year of £2,800. So it's not like we're putting a lot of money in, but shall we say, it's on a regular basis, the first of each month. Our platform provided charges fees of £16.10, which is a percentage of our portfolio value, which is roughly about the same each month. But where is the funds are held geographically? Well, at the moment, 57% in UK and Europe, 30% in America and emerging markets, and 12% in, shall we say, Asia and emerging markets. So what sort of dividend to receive in the month? Well, across our shares, we've got an average yield of 6.1%. We own 10 shares. Within the fund, though, this month we received from our adventurous fund £92.85 are only dividend, but year to date £3,924. We were expecting £3,003, so we're £624 well above expectations, but we will also have some nice dividends payable in December. Let's look at the holdings within our portfolio. Now these are my own personal opinions, okay? They're all what we consider long-term holds. We've got no reason to sell any shares in the foreseeable future. So we own 10 shares, 7 in profit, 3 in loss. 45% of our portfolio, of which 39% in the FTSE 100, 6% in the FTSE 250. Now our total shares are worth £54,822. Look at the following graphic, where they're held. Well, our largest holding is Lloyds Banking Group, 20,163 shares, £10,700, nearly 9% of our portfolio. Has struggled lately, shall we say, because of the car finance scandal. Who knows what will happen in the future, but is very cash rich, does pay a nice yield around about 5%, and it has had very good results in recent quarters. We own L&G, the insurance company, £10,600, 4,749 shares, 9% of our portfolio, but a yield of around about 9%. Just switch off, everyone needs insurance, but it has struggled recently, shall we say. We own Aviva, 1,898 shares, £9,100, 8% of our portfolio. Again, like L&G, a very nice yield, around about 8%, and it has just made an audacious bid for Direct Line, so that's what happens with that, shall we say, proposed takeover in future. But it is back on the acquisition trail because it is very cash rich, looking to expand. We own Barclays Bank, 1,561 shares, £4,300, 3.6% of our portfolio. Again, just like Lloyds, very good results. Interest been very lately. Dividends got nice yield, around about 4 or 5%. Just switch off, does what it says to tip. We own HSBC. It was done for the diversification, 535 shares, £4,000, 3% of our portfolio, but it does, shall we say, mainly in South Asia, South America, but a very cash-rich company, and quarter dividends will be payable in December. One share that's done very good lately is NatWest, the banking group, £4,135, 3.5% of our portfolio, 1,008 shares, but it has been on a good run, mainly because the government have been reducing the stake. It's now down to 11%, and they reckon it's going to be paid off back under control early next spring. So hopefully free shackles moving forwards. Away from the banks, we own Card Factory. 3,917 shares, 3.5 grand, 3% of the portfolio, very cash rich. Will pay a dividend in December of a small amount, but we'll see as a growth company. It's expanding, shall we say, in high street, and away from high street, shall we say, food courts, shall we say, retailers, service stations, etc. We own AJ Bell, the platform provider, 731 shares, £3,500, 2.9% of the portfolio, but what we see as a growth stock. Very good, shall we say, results, assets under management increasing, customers increasing, and the dividend being increased, but it's a growth stock. We own Sainsbury's, the food retailer, 911 shares, £2,500, 2% of our portfolio. Again, cash rich, isn't some kind of price war, shall we say, or the supermarket, especially Aldi. Hopefully a very good trading statement over Christmas, but it will pay a nice dividend later in December. And then finally, we own Phoenix Group, the insurance company. 466 shares, £2,400, 2% of our portfolio, but a very nice yield of around about 10%. But it has, shall we say, focused within the pension market we know about, but it has been buying other companies, and the dividend is very nice and healthy. So a collection of, shall we say, shares, mainly financial services, but it's what we know about. We see no reason we're going to sell any shares for the future, just switch off, but some very nice dividends will be paid during the coming months. Remember, to my own pace pennies. If you like videos, smash the like button, subscribe to the channel. Now let's look at what funds we hold within the portfolio. Now at the moment we own 9 funds in the portfolio. 5 in profit, 4 in loss, makes up 55% of the portfolio. Total fund value of £63,765. Look at the following graphic. Where are the funds held? Well, we own a passive advantage fund of an offer by a platform provider of £24,000, nearly 20% of the portfolio, and it did give us a small dividend of £93 during the month. We own a Legal and General Technology Fund, £15,000, 12% of our portfolio, low fees, shall we say 0.3%, owns around about 260 shares, but the tech sector is very good, really, especially with the Trump winning election. Who knows what will happen moving forward, but it concentrates on, shall we say, the big players. We own a Fidelity World Index Fund. It was done to the dedication. £1,200 or £12,300, 10% of our portfolio, and we did top in the month of £250, but very low fees of 0.12%, owns around about 400 stocks, but it does give an annual yield or return 10% over the past few years. Now some funds that have struggled. Fidelity China Fund, £2,400, 2%. 2 emerging market funds, £1,800, 1.5%, and a second one of £1,200, 1%, have struggled. Hopefully back in profit, we're going to reduce the holdings. I'm going to put, shall we say, a Fidelity World Index Fund or a passive fund. 1, keep it simple, shall we say, but 2, we're paying less fees. And our smallest fund which has struggled is a Russia fund. We put £500 in, went to £600 plus, struggled ever since the Russia-Ukraine conflict, now at 189, but thankfully it makes up 0.16% of the portfolio, but who knows what will happen with that fund, but thankfully it's only a tiny amount. But it just goes to what's happened with being, shall we say, against a selective or one, shall we say, geographical area. Now 2 funds we own of note, we've done for side tracking, we've earmarked some money for a particular purpose. We put £3,000 in S&P 500 fund. It's now worth 3.5, but makes up 3% of the portfolio. S&P has a great result, or great results in the past 12 months. And we put £5,000 in an FT All World Share Index fund. It's now worth 5.9, but it makes up 4.8% of our portfolio. So our tech fund's doing good, passive fund's doing good, our World Index fund's doing good, but we've struggled, shall we say, with selective funds. China, emerging market, Russia. Who knows what will happen moving forwards, but it just goes to show, shall we say, we're trying to simplify our lives. But we've done it for a reason. It just goes to show, if I can build a portfolio to over 6 figures, you can too. If you invest on a regular basis, within a tax-free investment wrapper, and you think long term. Remember, like the videos, smash the like button, subscribe to the channel, and we'll see you again soon.